I did a video yesterday in which I shared my belief that Amazon is grossly overpriced and will come down substantially. I hope you saw that. I want to carry on that campaign, and I want to talk about Microsoft. I don't think Microsoft is near as overpriced as Amazon is, but nonetheless, I think there's going to be a buying opportunity because there's about 6 stocks that I'll cover over the next 2 weeks that I think are going to give us the part of the future, part of digital 3.0 or what they're calling web 3.0 or the metaverse. And it's because they own the data. But right now, they're grossly overpriced. They spent too much money. They didn't spend it in the right places. They're cutting employment. They're cutting exposure. And so they're going to have a tough second quarter. And that's going to be our opportunity. But we got to have a plan. Let me talk to you about Microsoft.
Best of Us Investors presents Carrie Griegmeyer.
Okay, again, this is my spreadsheet that I'm building on and working with, and I'm going to continue to use to give you a projection or a justification for the projection of what I think a stock is worth. And today, as I said, we're focusing on Microsoft, currently selling at $251.09 per share. Current PE ratio of 26.44. My premise is no company should have anything more than a PE ratio over 20 because we don't know what the world's going to look like in 10 years, let alone 20. So why would we project that or value a company on a 20-year PE ratio or longer than 20? So at a 20, I show at the current earnings per share, or the projected earnings per share of $9.53 in 2023, that the stock is worth $190.60. One of the things I then did to substantiate this is I went to Seeking Alpha and looked at their quarterly report, their first quarter report, which actually came out in the end of October, and compared their revenues and tried to understand why the numbers were what they were. Again, this is quarter. These numbers up here on revenues are annual. So that's the difference there. So quarter to quarter, they had revenues of $50 billion. That was up 11%. Operating income, $21 billion. That was up 6%. Net income, 17.6, and that was down 14%. And when I see that kind of difference, I want to say, why? Your earnings are up, your revenues are up, your income is up. Why is your net income down? And as I dug into it on Seeking Alpha, I found that they had a $4 billion tax provision. This was something, they didn't go into great detail on it, but their tax obligation in this first quarter 2023 was $4 billion more than it was the preceding year. And that created the downturn in their net income, resulting in a downturn in their projected earnings per share of 13%. Now, what I then went to look at was, and again, this was all in Seeking Alpha, is their cloud revenues were up 24%, and their business processing were up 9%. Office products, they didn't really give the details that I was hoping for, but nonetheless, we know this represents here, what would that be? About 41%, 41 billion of the 51 billion. So that's the bulk of their revenues. So I look at this and say, I don't want to give them a 26 year earnings PE ratio. I want to keep it at 20. And so my price to you, if you have Microsoft shares today, is not $251 a share, but instead $190. And again, I think I will reach that number? Yeah, I do. And I want to show you on a chart why I think I'll reach that number, and we'll go from there. Okay, this is my trading views chart on Microsoft. And as you can see, it goes back to June of 2017. And I've got a couple of readings in here. The 200-day moving average is in red, the 50-day in blue, and the yellow is the 9-day. And as you can see, it's still under the 200-day moving average. So in my mind, it's on a downtrend. And that's evidenced by the 50-day. It's moving in a down direction. The other thing I have in here is what is called a Fibonacci retracement. What this does is you go from its low point of recent time, and that would be March of 2020, to its high point, and that would be November of 2021, and Fibonacci statistics or history says it will retrace itself. In one case, it gives you a 50% factor of retracement, and the other a 76. And as you can see, it has in fact done the 50-day retracement. It has gotten below $242 per share, and sitting at 252 today. It has not reached the 78% retracement, which is at $179. But this line represents the $190 that I think that Microsoft will experience sometime in the next probably 6 months. Why do I think that? And I think that because not so much that I believe that Microsoft's business will collapse. I think the overall market will pull it down. And what I'm referring to there is we will have higher interest rates. We will take more drastic action to curb inflation, and that'll bring the whole S&P and particularly the NASDAQ market down. And then I think, if not Microsoft, I believe that the tech community as a whole, and I mean here Amazon, probably Google, probably Facebook, because of their heavy dependence on the consumer traffic, is going to experience another 20% down. And I think that will bring Microsoft down to my $190 target price. So that's the logic I have. And I want to share that with you, and I want you to give me your input on it. Okay, so now I've done my analysis of Amazon and of Microsoft, and I also want to look at Google, Facebook, or Meta, and NVIDIA. And then I'll dig into some of my war stocks and some of my dividend stocks and basically take a look at them individually, see what they're made up of, look at their quarterly reports, and make a decision. And I'm doing this because I recognize this is a buying opportunity. It's probably 3 to 6 months off, but we got to be prepared, and we got to have a plan. And that's what I like about this is let's bring it down to a price that we're willing to pay for the stocks. And I think we're going to have that opportunity, but we need to be prepared and we need to be in a good position. So that's where I'm taking my channel. That's where I'm taking my portfolio, even more important. And that's where I want to take the tribe. The tribe is made up of the members of our Discord. We do even some swing trading training there. Mark does that for us. I encourage you to go to the Discord, familiarize yourself more with our channel, because we're here I'm here to share my knowledge. And I promise to get deeper into it and not give so much faith to the innovation and the disruption gods, and do more work on what makes a company a good purchase. And that's its ability to continually generate income and grow and increase my equity. Okay, I'll talk more about this tomorrow.